How to start making money right away. In the last lecture, we talked about the edge we have as short sellers in this ETF. Again, no matter where you shorted it in the last 5 years, you made money. So if you want to get started making money today, you can simply initiate a short position today in the VXX and hold it as long as you want, years or even decades. And you'll never pay tax on it either until you close the position, which is something you might want to do ahead of a recession or if there was another serious financial crisis looming. I go into more detail on how to spot these situations in the big volatility short, but all you need to know is that you have a massive amount of decay in your favor, as you can see. And again, the mechanism that causes this decay is explained in detail in the big volatility short. So if you want to get a really in-depth understanding of it, be sure to check out that course. But let's say you ignore all of that and initiated your short position at one of the worst times ever, right here, ahead of the European financial crisis of 2011. You can see the VXX had a 140% rise there. So how can you protect yourself from an event like this? Well, let's go through an example. If you initiated a short position today, you want it to be a long-term position that you hold all year long or longer. And what you'll want to do is keep your position small, about 10 to 20% of your account value, depending on your risk tolerance. That way, your protection comes in the form of a small position size. Even if you're oblivious to the news and you're unfortunate enough to go through that 140% rise in the VXX, you'd sail through it just fine and still have a nice gain a year later. And what you'll want to do is add to your position on the price spikes. Now, if you have a set of rules for position sizing, you can treat your position as a standard stock position in your portfolio. Let's go through an example $50,000 account. Here's a chart of the VXX from the last year. Let's say you want it to be fairly aggressive and go with 20% of your account value on this trade. That would be a short position of $10,000. And even though your timing in January wasn't the best, you can see the VXX went a bit higher over the next 2 months. But 3 months later, you had a huge gain. And if you held it for the entire year, you can see the VXX dropped about 82%, which would give you an $8,200 gain on your trade. But remember that with short selling, your position gets smaller as price drops. So at this level, your position would only be $1,800. If you want to keep your position around your original $10,000 size, you'll have to keep adding shares to your short position over time. And the best time to do that is on the smaller price spikes. For example, you might add to your position here, and add more again here, and more here, and so on. And your gains keep accumulating as time goes on, and the VXX decays more and more every year. Keep in mind that these moves are in percentage terms, and that there's no intrinsic value to the VXX. They'll continue to do reverse stock splits to keep the price of the shares up, but the decay will continue year after year, decade after decade. Congratulations on completing the course. You now have a source of risk-free income from the stock market. What more can you ask for from a free course? Considering the money you can make and the fact that it's risk-free as long as you manage it properly, the information I just presented to you here is worth more than most of all of the paid finance courses on Udemy. So I would just like to end by saying that if you enjoyed the course and you found this information useful, please consider leaving a 5-star rating. Thanks.